Hello friends, today we will discuss Indian Rupee has strengthened significantly against US dollar. It is being said Rupee is surging and dollar is weakening. So what is the reason behind this surge? We have to discuss, is it a sudden spike or a steady trend? So it can be said a bit of both. There has been steady appreciation punctuated by sharper moves tied to economic data and flows. Why US dollar is weakening? There are three main reasons: softer US economic data, slower growth and cooling inflation expectation, reduced demand for a safe haven dollar. Second is Fed messaging. If rate hiking pauses or markets price an earlier cut, yield differentials narrow, weakening the dollar. Third is global risk on appetite. When global investors chase higher yielding or growth exposed markets, the dollar often sees why the rupee is rising. Strong capital inflows, FDI and portfolio flows returning as investors like India's growth story. Robust exports and services receipts, especially software and remittances supporting FX inflows, foreign exchange inflows. RBI's management, the Reserve Bank has been using tools to smooth volatility and maintain confidence. These are combining with relatively stable macro fundamentals and giving rupee strength. So the interplay flows, rates and oil. Oil imports, India is a big importer, so lower prices help the trade balance and support the rupee. Interest rate differentials matter too. If global yields fall while India's remain stable, capital seeks yield. Here it is a dance between macro data and central bank moves and commodity price. What you think? Will the rupee hit by year end? To 80 by year end? I read every comment and I will feature the most insightful. Why it matters to us travelers. Good news: overseas buying power improves. Importers might benefit from cheaper dollar cost, but exporters could feel pressure on margins. For investors, a stronger rupee can dampen returns for foreign investors in dollar terms, but domestic opportunities may become more attractive. So tourists could reverse the trend is also there. First is a stronger than expected US economy prompting Fed hikes lifting the dollar. Second is any negative shock to India, geopolitical tension, sudden capital outflow or a spike in oil prices. So always we have to have a plan for volatility. So if you are planning travel, consider booking soon. If you are an investor, review currency exposure and hedge it if necessary. For long-term investors, focus on fundamentals, businesses and sectors that benefit from domestic growth.